The U.S. housing market can be described currently as a complicated market. Rising mortgage rates over the past year have steered so many would-be home buyers out of the market, which has led to a softer demand and declining home prices. The U.S. housing market began this year in a state of rebalance, with many buyers and sellers remaining cautious while they're watching what the market is going to do and what the economy is going to do. Nationally, pending sales rose 2.5% month to month, making it the first increase since May of last year. While the sales of existing homes fell 1.5% as of the last measure, and this is according to the National Association of Realtors. Demand for housing persists, but higher mortgage rates have really caused buyers to take a step back and has cut into housing affordability with so many home buyers. Total home sales fell 17.8% last year compared to 2021. Closed sales decreased 35% for detached homes and 37% for attached homes. Our pending sales here in San Diego are down 25% for detached homes and 27% for attached homes. The median sales price in San Diego was down 2.6% to $925,000 for detached homes, but it increased 6.7% to $640,000 for attached homes. See, complicated. Our days on market increased 135% for detached homes and 253% for attached homes, going more from like 6 days on the market to 30 to 60 days. Detached homes, we're seeing a higher increase in days on market as attached homes had a smaller increase. As our sales slow, time on market is increasing, with the average home spending about 26 days on the market as of last month and the numbers this month. According to National Association of Realtors, seller concessions have made a huge comeback. This is giving buyers more time and negotiating power when shopping for a home. Although home prices remain high, mortgage rates declined steadily throughout January, which is some good news for home buyers. They're falling to their lowest level since September, sparking a recent surge in mortgage demand. Lower interest rates should add some help in affordability and may soon lead to an uptick in market activity ahead as the spring selling season comes into full force. Our San Diego County housing numbers overall are down 1.3%. South San Diego County was down 3.7%. North San Diego County was up 0.6%. Metro San Diego County down 1.6%. And East San Diego County, the biggest decline at 2.3%. But prices are still historically high, even after this recent dip, and mortgage rates are historically low compared to the last 10 years, despite more than doubling in the space of a year. These combined trends give a lot of uncertainty to the market, and if you look at the economy, it continues to outperform expectations, and it makes it very difficult to gauge where the housing market is going to go. One thing for certain is that U.S. home prices have fallen from last year's peaks. In December of 2022, average home prices rose 6.9% year over year, but fell 0.04% on a monthly basis, according to CoreLogic. In addition, Realtor.com reported that median list prices rose 8.4% year over year in December, though they were down 11% where they were in June. So we had such a big rise up in housing prices that we are coming down. Many housing market experts expect the market to continue to weaken further in 2023, but not all do. So here's a look at a few housing trends to know this month. Analysts at Zillow predict home prices are going to remain flat nationally and even fall in some sections of the country, as we've seen here in San Diego. Both Freddie Mac and Mortgage Bankers Association expect modest average prices to decline nationally in 2023. Freddie Mac projects a 0.2% dip, while MBA sees an average prices falling 0.6%. So these are not huge numbers, but they are declines. They're saying that they expect prices to decline modestly, but the downside risks are elevated, Freddie Mac economists wrote in a report. Not all housing markets see home prices dipping in 2023. An analysis from Fortune found that the following organizations expect home prices to keep pushing higher this year. Realtor.com, its economics team predicts that the median price of existing homes will rise 5.4% for the rest of this year. HomeLLC.com expects U.S. home prices to climb 4% in 2023. CoreLogic is expecting a year-over-year home price to increase 3% from December 2022 to December 2023, which is a pretty natural, normal increase. The National Association of Realtors forecasts that home prices in the U.S. will average $385 in 2023, which just is about a 0.3% increase compared to 2022. A number of housing and financial experts said that mortgage rates have already peaked and will head lower in the coming months. The MBA expects the 30-year mortgage rates to end 2023 at 5.2% versus the higher sixes we were seeing at the beginning of the year, and I truly think that that is going to be the new normal. Forbes reported the same kind of numbers as well. NAR is reporting if inflation continues to slow down, and that is the entire reason why they're raising rates, we expect mortgage rates to be stabilized below 6% in 2023. So the best way to sum up the housing market today is unpredictable. It's going to be super important to watch the numbers and gather as much information as you can. Make sure you're not just getting scooped up into the fear-based of all of the crazy headlines that are trying to get you to click and be worried, and stay educated in today's housing market, especially if you're thinking about buying or selling this year. I'm always available to talk housing market numbers with you locally. Everything is very zip code dependent, and you can reach out to me anytime, and my contact links are below. I look forward to seeing you on the next episode.